Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So in this video, I want to talk through a big update that has recently come out of Seritage Growth Properties, which is a business that I've been tracking sort of on this channel. And that update is that the CEO is leaving. This is pretty big news, certainly when you start to look at the management component of this investment case. So I want to run you through sort of three main things in this video. Firstly, what is the news with the CEO? Why are they leaving? Where are they going? Secondly, how does that impact the investment thesis? And thirdly, how am I going to be approaching my personal shareholding in Seritage Growth Properties moving forward? And of course, you should all know this by now, but just as a quick reminder, nothing in this video, of course, is investment advice, entertainment purposes only. So with all that said, I do hope you enjoy, and let's get straight into the video. Alright, so firstly, I just want to read through some of the highlights from a press release straight out of Seritage Growth Properties on their investor relations page, and this came out on the 10th of December 2020. So the press release reads, Seritage Growth Properties announced today that Benjamin Shaw, the company's CEO, president and trustee, is resigning from his role to pursue another opportunity. Mr. Shaw will facilitate the transition of his responsibilities by mid-2021. The Board of Trustees will conduct a search for Mr. Shaw's successor, which shall include internal and external candidates. Mr. Shaw will also step down from the Board of Trustees in 2021. And basically the press release goes on to say, you know, Ben's done a great job. He's been with SRG since 2015. Really doesn't tell us all that much about, you know, who the future CEO of Seritage is going to be, or why he might have actually left in the first place. Now, did manage to find actually another press release on why Benjamin Shaw had left, and that actually came out of a business called Avalon Bay Communities, which is actually another REIT, another publicly listed real estate business in the US. And basically that press release goes on to say that Benjamin Shaw will be the new CEO of Avalon Bay Communities. So from my perspective, it actually looks like quite a substantial I guess promotion, move into a bigger company. If you compare something like, say, the market cap of Seritage Growth Properties, which is in the mid sort of $800 million range at the moment, to the market cap of Avalon Bay Communities, which is about $22 billion, he's moving to a REIT that in market cap terms at least is about 25 times the size of Seritage. So it looks like a sort of substantial step up, and that frankly is my main guess without actually being given all that much information from Seritage, which is kind of disappointing to be frank. But that's kind of my guess on probably the main reason why Benjamin Shaw has moved. He's moved on to kind of bigger and better opportunities. But with that said, that's kind of the update out of SRG and what's actually happening. So let's move into sort of a refresher on the investment case from my perspective with Seritage Growth Properties, and whether I think we need to sort of adjust some of our assumptions or you know, prospects moving forward or anything like that with this investment. So in terms of what's going on with Seritage Growth Properties, basically what happened is Seritage Growth Properties is a real estate investment trust, and all of their real estate assets originally came from the Sears business. So Seritage Growth Properties was spun out of Sears sort of a couple of years before they went bankrupt, and this is basically what's happening. So at the time when Seritage got spun out of Sears, a high proportion of their tenants were Sears kind of shops, and they were paying very low rents per square foot, sort of $3, $4, $5 per square foot type numbers to rent those properties from Seritage. And basically what's happening is Seritage are going through this transition period. So they're going from, you know, a high dependency on Sears to now a point where Sears is well below 5% of their total revenue. There's been a big shift there. And that comes along with kind of a couple of things. So the first thing is when they get new tenants in, they're typically paying much higher rents. And the other thing that Seritage are doing is sort of redeveloping some of their properties. So through those redevelopment projects, they're also able to increase their rents a lot from that. So you're going from properties renting for say $3, $4, $5 a square foot to Sears or some other sort of lower paying tenant, up to as high as $18 or $20 a square foot with these redeveloped properties with new tenants in them. And Seritage are very much still in the process of going through this redevelopment. They've taken on some debt from Berkshire Hathaway to assist with that. They've sort of identified some of their properties that have really attractive economics for redevelopment, where they think they can spend money to do those projects and get really good returns on them. And they've also identified properties where they don't think the redevelopment prospects are that high, and they've sort of been selling off those real estate assets to fund the kind of more lucrative projects. So that's kind of the business plan for Seritage Growth Properties. In terms of the actual investment case, from my perspective, that's kind of twofold. So when Seritage Growth Properties first really came on my radar, I had seen it in 13Fs over the past couple of years, but it really popped up sort of front of mind when Monish Prabhai purchased quite heavily into SRG. Monish Prabhai had put about 10% of his fund into Seritage Growth Properties very, very quickly, really aggressive bet, and he'd done it after SRG had come down a lot in terms of their stock price. So that prompted me to look into it a little bit more, did a live stream with Brad Kellner, and he did some great work on kind of a couple of different ways of valuing SRG. So I guess the long-term vision or the upside for an investment in Seritage Growth Properties is really to have this portfolio of redeveloped businesses, high sort of occupancy rates with really high paying tenants. That's kind of the end goal for SRG, but there is a transition phase for them to get to there, and we sort of looked at that investment in a couple of ways. So, you have people like Phil Town, for example, who are also invested in SRG, saying that, once they get through all this redevelopment, in 10 years time, they think SRG could be worth as much as $140 a share. That's kind of the upside that people like Phil Town see. But as value investors, we always need to think about downside protection and focusing on rule number one, don't lose money, right? So some of the work that Brad did for our live stream is he actually went through and he valued individually every single property that Seritage Growth Properties owned. And he then went and took away all of the liabilities, so the debt that Seritage has to Berkshire Hathaway, and also the liquidation value of some preferred stock and some other things like that. And essentially, he came up with sort of a liquidation or a theoretical liquidation value for SRG of a little over $30 per share. Now, if we apply a 50% margin of safety to that, we land in the sort of $15, $16 a share type range. And at the time when we were doing that live stream, it was trading at, say, $12, and that's around what my sort of cost basis personally is in Seritage. So if we try to think as rationally as possible about how a change in management could change the investment prospects for Seritage, we basically have to look at it from two different angles. So the first one, which is really simple, is the liquidation value that we sort of came up with. Now, a change in management does not change the value of Seritage's real estate assets if they were to be sold today. Those real estate assets have a market value, the debt has a certain value, the preferred stock liquidation value has a certain number on it as well, and absolutely none of that changes with a different management. So really we still have that theoretical liquidation value. If they were to wind up all the company today, it's probably worth something like $30 a share ballpark. Granted, there's some sort of leeway in that. There's also some leverage built into Seritage as well. So, if you're a couple percent off with your real estate values, you can be more than a couple percent off with your estimate of equity. So, ballpark, that's kind of where we're thinking, but, there could be sort of a range either side. So that in my mind does not change at all with a change in management. Now what potentially can change is the longer term upside, is that getting to the, fully redeveloped kind of SRG portfolio. So from my perspective, that potentially is where some new additional risk or uncertainty can kind of come into this investment case. Now, keep in mind the real estate business is a relatively simple business, and there are a lot of people in the world with a lot of real estate expertise and a lot of real estate developers that I'm sure could do a very, very good job at SRG. So, finding a new person that would suit the role, I don't think is going to be some impossible task. The other thing to keep in mind is that we still have Eddie Lampert on the board of directors. Now, Eddie Lampert and his various funds own a huge stake in Seritage, and they are heavily incentivized for the stock to do well over time, which means the redevelopment project's doing really well over time. And he's someone with very much kind of a value investing background. He's someone that understands capital allocation, and I'm sure when he's appointing a new CEO, that will be absolutely front of mind for Eddie Lampert as well. So let's move into the final part of this video in terms of what I'm personally going to do, and again, not investment advice whatsoever. So I guess a couple of things. So firstly, Seritage Growth Properties, from when I first invested in the business, was always going to be a company that you have to keep a very close eye on moving forward. The upside in this investment is something that requires a lot of really good execution over a long period of time to go through these redevelopment projects. So even with Benjamin Shaw at the helm, really there was still going to be lots to keep an eye on, and that will be exactly exactly the same case with a new CEO once they are in place. The liquidation value, really what I see as sort of a floor on the underlying value of SRG right now. That's unchanged, but certainly the execution moving forward is something to keep a really close eye on. So that's exactly what I'm going to do. I'm going to continue holding my stake for now at least, continue to keep an eye on how these development projects progress and make sure that they're still on track with what they're sort of have always aimed to do. And the other part of it is when things get really tricky, and you've also got a lot of super investors kind of in this business as well, we get the added advantage of being able to keep an eye on them as well. Now, there are three main investors that I follow that have relatively recent investments in Seritage growth properties. So Monish Pabrai is the big one. We also have Guy Spear, and we also have Phil Town, and we also have Warren Buffett personally. Now, Warren Buffett and Monish Pabrai have both had to file 13 Gs for Seritage growth properties, meaning they own a large enough stake to where if they make any changes in their shareholding, they're going to have to tell us quite quickly. So frankly, I'll just be keeping an eye out for 13 Ds from Warren Buffett and Monish Pabrai. And if anything changes, if they buy more shares or if they start selling their shares, I'm probably just going to clone that. I'm going to outsource that to people that are much smarter than me and have been in the investing game for much longer than me, and I'm just going to copy them, and that's about as simple as I'm going to keep it. Now, if the 13Fs for the next quarter come out and all of those investors are continuing to hold, then that's what I'm going to do as well. I'm going to just clone people that are a whole lot smarter than me and, not stress about trying to make those sorts of decisions myself, because frankly, I don't have to, and these guys are way more intelligent than I am. Now, that said, I think that can sometimes be a little bit of a trap, and you've certainly got to continue to think rationally. If something does come out of left field, and I don't think we can afford to wait for a 13F, perhaps I'll make a change. But at this stage, that's kind of how I'm viewing SRG. I don't think the liquidation value has changed. I think the long-term trajectory for redevelopment and so on is probably unchanged as well, but that's something, again, that we'll have to keep an eye on and that we were going to keep an eye on anyway. And in terms of making changes to my current shareholding, I'll simply be keeping an eye on all the great investors that are already in that name with me. So that's my thoughts on the recent news out of Seritage growth properties and the sort of CEO transition that's been announced. If you've got any thoughts on it as well, I would love to hear that down in the comments below. Changes in management are always a really tricky one to assess. Even management teams that have been in the business quite a long time are sometimes pretty tough to kind of assess what they're up to. So this one's a little bit tricky, and I'm certainly keen to hear any comments you've got down in the comment section below. I will certainly keep an eye out for that. But that is all from me today, and I will see you in the next one. Cheers.